Welcome back to Fast Market on the TD Ameritrade Network. I'm Tom White, joined by my co-host Kevin Hinks. But let's bring in our next guest for our cash tag segment, and that's going to be Landon Swan, the co-founder of LikeFolio. Welcome back to the show, Landon.
Thank you. Good to see you, Tom. Good to see you, Kevin.
All right, so we're talking Roblox. Just looking at some of the numbers, because they gave preliminary results for September daily active users. Everything looked good on the top line, but then you start looking at the average revenue or bookings per user starting to decrease a little bit. This is one of those metaverse plays, Landon. Did really well during the pandemic, but growth has started to slow. Costs are rising. What kind of data are you guys seeing on LikeFolio going into this report? Because the stock's pulled back about 60% so far this year.
Yeah, tough year so far. If you look at the number of people talking about Roblox, excuse me, you can see a significant uptick, just as you talked about, in right around when the pandemic hit. Makes total sense. I mean, people are, they're getting more into online gaming and things like that. This chart is specifically talking about the in-game currency, Robux, which I love the name, but nice run up there. And it's, it has mostly held. It's pulling back a little bit, still up slightly on a year-over-year basis. But you can see the general trajectory from, summer of 2020 is downward pretty sharply, and it's, sort of stabilizing now. But when we look at the mentions of just Roblox in general, they were growing, they were doing well before the pandemic, and then it basically doubled, right? I mean, everybody started playing this, all the kids started getting on this game, and it held throughout then, right? It's been holding ever since. You can see those quarterly bars have been holding very strongly, but we're starting to get a little bit of a pullback. And in fact, if you look, that 22 Q3, that the second to last bar, that's the one that they're reporting on. The very far right bar, and so I think the reporting quarter could be decent, could be in line with expectations. But the very far right bar, that's a little bit different color, that is the current quarter and the pace of the current quarter. And so that's the one that's, off about 19% year over year. That's the pace, again, of the current quarter. So if they start to get into guidance, I would be a little bit concerned that they might, they might hint at a little bit weaker guidance. So it comes at a tough time, because when you look at how, the gaming trends, everything is in their favor. Online gaming is up 30% year over year. Gaming in general, PC gaming, people talking about being new to gaming or gaming on a mobile, they're all up year over year. Everything is in line for a gaming company. And that's why we're a little bit disappointed with where Roblox is sitting at right now. Compare them to a company like Activision, who just reported, and we had a score of plus 47 on them. They're up slightly today. I would have liked to see more, but they have a very strong reaction from users. They have much more growth than Roblox does right now. And even Take-Two has a slightly better score than they do. I think some of it has to do with the happiness. Those two companies, Activision and Take-Two, are both right around 70%, whereas Roblox is around 63%. But just in general, it's, we're just not seeing the growth that you would think would be supported by all of these trends working in their favor. So it begs the question to the investor, was this just a pandemic hit, and is it on its way out? Is this sort of like a Peloton or even like a Zoom, if you want to make that argument? So that's what I would be concerned with as an investor. The data looks okay. It's just not as strong as it should be, given the pre-pandemic trajectory was going up really well. Huge boost from pandemic, but now it's kind of flatlining and starting to pull back.
Yeah, Landon, if you're a value investor, this company doesn't make money. If you're a growth investor, their growth is starting to slow into the single digits now. So you don't like them if you're value, you really don't like them if you're growth. They trade at about 80 times of their free cash flow, but this co-experience platform that they have is possibly the future of gaming, right? It's where you basically, you get to go in there. When you hear their concept, it sounds cool and exciting, and that comes from a non-gamer. The question I have to you, Landon, is this just a good company going through a hard period in their history and something that they'll easily come out of?
I think that would be a pretty bold statement to make. I do think it's a good company.
We don't care.
I think it's a good company.
Yeah.
When it comes to games, the problem is that you don't always get the reward for being first to market, right? I mean, they're definitely innovative. They're definitely a leader. But even if you're making the argument that the metaverse is going to revolutionize gaming, and I think that's probably a valid argument, it doesn't necessarily mean that the first in is going to lead it the whole way. A year or two from now, there could be a new concept come out, a new competitor, maybe driven by one of these larger companies, Activision, for example, or Microsoft, if that acquisition takes place. And it could be better, and there's no loyalty. Like, I mean, there's some loyalty if you build up over years and years and years, but this is a new company. They don't have that much, relatively new company. They don't have that much to bank on. So I wouldn't say that they're in the strongest position market-wise. I do love what they're trying to do, and I think that they found themselves in a situation where they were increasing their users, they were increasing their memberships, doing really well. COVID hit, everything boomed. They held on to that. It wasn't just a flash in the pan, which is huge. They held on to that. But now it's starting to fade a little bit. So the question is, what kind of investor does this appeal to? It's not growth and it's not value. So that's the question I think a lot of people are looking at, and that's probably why the stock's down so much.
Yeah, and revenues pegged just under $700 million. That's going to be a decline from year ago period. Just, to kind of clarify your outlook here, where the pandemic actually helped them, right? So the comparables are going to be really tough. But when you talk about this Robux, that's, I think, one of the inroads maybe down the road as the metaverse gets built out, where they can actually, maybe gain some momentum, because the daily active users were actually up 23% year over year in the month of September here, Landon. So, with the high valuation and the cost cutting probably needed at this company and slowdown in revenue growth, do you see any upside momentum in that Robux segment of their business?
Yeah, I mean, if you look at the last quarterly report, they initially sold off because of the revenue miss and earnings miss. The loss was wider than expected. But then when they started talking about daily active users and how many hours people are on, the stock completely turned around and it ended up on the day. And so I think that a lot of people see the value in more users long term, and it may be expensive to get them now. They may have a high cost of acquisition, but if you can get them to stay and if they're sticky, then you've got this currency that's gonna definitely help the company. You've got more users. Anytime you've got a base of users who are spending more time in a platform that has microtransactions or that has a currency where you can take advantage of that as a company, obviously that's going to be good. So the key for them is acquiring new customers, but doing it in a reasonable manner so it's not too expensive, and then delivering a product that is so sticky that people not only stick around, but play more and encourage their friends to play. So that's really what they're selling to investors. I think that, based on this currency data, maybe plus 3% year over year, based on the mentions data, flat or falling off a little bit. That's the challenge that they have to do. It's not so much about the revenue, as long as they have enough cash in the bank, and it's not so much about the losses. It's about how many users they have and how much they're playing per day.
Yeah, and this isn't the macro environment to kind of navigate those waters at all at this point, as we've seen from many companies. Take-Two down about 10% today. But Landon, do you guys have an earnings score real quick for Roblox going into this report?
We do. We're right at a -7, which, a lot of times we would look at doing something sideways like an iron condor or something like that. But when you look at the last 4 moves of this company, holy cow, they have had some like 25, 30, 35% moves in the earnings week. So I'm looking forward. I'm going to stick around and see what you guys recommend, because I really don't know how to trade this one.
All right. Well, just basically neutral, a little bit negative here going into this report. And to your point, Landon, the option market's pricing a plus or minus 15% move in the shares. So implied volatility is pretty elevated. All right, Landon, great stuff as always. Thanks.
Thanks, guys.
That's Landon Swan, co-founder of LikeFolio, breaking down Roblox and the data behind it.